Trying to understand today's market can feel like you're sailing in a storm, right? It's so easy to get caught up in the choppy, unpredictable waves of daily stock prices. But what if the real story, the real direction a company is headed, is actually happening in a powerful, deep current, way beneath all that surface chaos? Well, today, we're diving deep into Fujitsu to do just that, to separate the short-term noise from the long-term structural growth. So this is the main idea we're going to play with today. On one side, you've got what we're calling surface waves. That's all the daily headlines, the price charts that demand our attention. But on the other side, you have the giant ocean currents. Now, these are the real drivers, the company's core strategy, its profitability, its innovation, the things that truly shape its long-term journey. And believe me, understanding that difference is everything. Okay, let's talk about those surface waves first, because they are definitely real. Just recently, we've seen Fujitsu stock go through these kinds of ups and downs. And look, that's the kind of volatility that can make any investor a little bit nervous. But the real question we have to ask is this: are these swings actually telling us something about the company's health, or are they just, market noise? And that quote right there, that brings us to the absolute heart of it. It just perfectly captures the shift in thinking we need. So right now, we're going to stop watching the waves, and instead, we're going to look for that powerful current that's actually moving the ship forward. So what are these deeper currents for Fujitsu? Well, it all boils down to a really clear and powerful story of financial strength and a huge strategic transformation that is literally reshaping the company from the inside out. And this, my friends, is where things get really, really interesting. Let's just start with a massive number. Fujitsu is forecasting a full-year adjusted operating profit of 380 billion yen. I mean, that's not just a solid figure. It's a huge signal that this company is hitting an entirely new level of performance. We're talking about a path to what could be record-breaking profits. And get this, it's not a one-off. That huge profit forecast, it represents a 23.7% increase compared to the year before. Growth like that tells you there's some serious momentum building up. So what's the engine behind this incredible surge? Well, the answer is a big strategic move called Fujitsu Uvance. You can think of this as the very heart of the company's transformation. It's their big bet on a future that's all about high-value digital services, the kind that helps solve major challenges for businesses and society. And yeah, that bet is paying off big time. Now just take a look at the story these numbers tell. Check out the revenue growth for Uvance in just a 9-month period. It rocketed from around 322 billion yen to nearly 493 billion yen. This is not slow and steady progress, folks. This is explosive growth. Let's boil all that down to a single number to really let it sink in. That's a 53% jump in revenue from their main growth engine in just 9 months. This shows that their whole transformation, it isn't just a plan on a PowerPoint slide, it's a commercial reality, and it is speeding up fast. And what's really cool is that the Uvance success isn't happening in some isolated bubble. That same strategic focus is boosting other key areas too, like modernization services. That's where they help clients update their old systems. A 25% growth here shows that the company's big pivot to higher margin, value-based services is working across the board. Okay, so we've seen the what, these really impressive growth numbers. But that, of course, leads us to the next big question. How are they doing it? How are they managing to crank up profitability so much, so fast? Well, it really comes down to a smart 3-part strategy. First up is smarter delivery. They're using cutting-edge tools like generative AI to make project delivery way more efficient and boost quality. Second is optimized talent, basically making sure the right people with the right skills are on the right projects every time. And third, and this one is so important, is a shift to value-based pricing. They're moving away from just selling man-hours and are now pricing their work based on the actual value and results they deliver to clients. Now, this kind of fundamental strength isn't just about impressive profit forecasts. It translates directly into something really tangible and important for any long-term investor: consistent returns for shareholders. This is what shows you that a company is on solid ground. And this really makes it crystal clear. We are looking at a track record of 10 straight years of dividend increases. This is not a short-term trend. It's a decade-long commitment, and it signals that this is a company that's not only growing, but is consistently sharing that success with its investors. And they are absolutely doubling down on that commitment. The company has actually raised its annual dividend forecast.
That's a huge sign of confidence for management about how they see the future. It's like they're saying, yeah, we believe these strong results are here to stay.
So let's bring it all back to where we started. The daily stop chart, those surface waves, they're always going to be choppy and unpredictable. That's just their nature. But what the data shows is that the giant ocean current, this fundamental shift in Fujitsu's business towards high growth, high profit services, is a truly powerful and permanent force. Which leaves us with one final big question for you to think about. We've seen the deep current, right? Record profit forecasts, explosive growth in key strategic areas, a decade of rising dividends. So when you look at the day-to-day action in the market, you really have to ask yourself, is the market seeing this powerful current, or is it still just watching the waves?